Hello, my name is Yasha and I help young men invest in the stock market. So today we are going to take a look at NetEase Incorporated with the stock ticker NTES because this stock seems quite interesting, so let's take a look at it together, okay? Now, as always, we are going to analyze NetEase using this little Canva presentation that I have right now here. So yeah, if you are interested whether you should buy or sell this stock, or if you just want to know as general how to analyze stocks as a complete beginner, then this video is perfect for you. Before we begin, why should you even listen to me? As you know, my name is Yasha and I help young men invest in the stock market. So when you have more trust for me, the first link in the description will take you to my one-to-one stock market coaching. So see you on the other side. Now, jokes aside, now we begin with the actual analysis. So this is going to be very beginner friendly, straightforward, without any bullshit. So grab a piece of paper, grab a pen, make some notes because you will learn a lot. Now, whenever you analyze stocks as a complete beginner, you should generally care about the following 6 things, okay? You should care about chart, profit, debt, money on the bank account, value, and price. Now, here we have some quick facts about NetEase. It's a gaming company that was founded in 1997 and it's a Chinese stock, which caught me completely off guard because they are listed on an American stock exchange. So I was thinking, okay, why not? Let's take a look at it together because it seems quite interesting actually. Now, here is immediately the first thing that you should pay attention to. You can see that NetEase was founded in 1997. Now, whenever you want to invest in stocks, you should generally invest in older companies, okay? Companies that were founded maybe 40, 50, even 60 years ago or even more, because the older the company is, the higher the chances it has that it will survive any potential stock market crash that will for sure at some point happen in the future. Because the older the company is, the more stock market crashes it survived. If you take a look at, for example, at Coca-Cola that was founded like 200 years ago or something, today they are still here and they survived at least 5 stock market crashes, 2 world wars, and they are still here today. Whereas when you take a look at this NetEase that was founded maybe 30 years ago, for them we don't know how they will react in another stock market crash because yeah, they survived maybe 2 of them, but that's about it, you know. So we don't know how younger companies will perform in the next future stock market crashes, you know, because older companies have this time-proven security. They are generally safer and just better investments, so to say, you know. So as a rule of thumb, the older the company, the better. Now let's come to the chart, and for chart we have an instruction that it has to grow for all 10 years. Now, what exactly does that mean? That means that I will draw a little exponential line, kinda like that, and we are going to compare the actual stock price chart, which is the orange line, with this black line, and then we are going to see whether the lines follow each other, because this is what we want. Because when the lines follow each other, that means that the company is growing, it's expanding, it's more and more profitable. This is what we want to see, okay? A growing company. And chart is the first thing that we see whether the company grows or not. Now, does the company grow here based on the chart? Do they follow each other? Yes, quite well until around 2024 when the stock price went down a bit. But still overall you can see an amazing growth, of course with ups and downs. So chart is actually very good to go. Now we come to the profit, and for profit we also have an instruction that profit has to be in plus and it has to grow as well. Now here is the very same story. Here I will draw a little exponential line again, kinda like that. And now we are going to compare the profit chart with this black line, okay? And they should again follow each other. What do we have here? We have a bit up and then down and then up, down and then up. So yeah, you can see that the trend goes upwards, the company is growing. which is an amazing sign as well, and we want to see that, okay? This is what we want to see. So far the NetEase is amazing, okay? Now we come to the debt, and for debt you have an instruction that it has to be low, and preferably it should also decrease through the years. Now unfortunately, as you can see on the screen, I couldn't find the data for the years of 2014 to 2020, but based on the last 3 years that we had the data, it seemed that the debt increased massively and then decreased again. So I'm not quite sure what happened, and I'm not quite sure if this is even reliable enough. So I will mark debt as a bad thing just to be sure, because also we are missing the data for those 6 years and we don't want to risk any potential bad investment, okay? And now we come to the money, and with the money we literally measure the money that they have on their bank account, as you can see right now here. And preferably they should have more money than the costs, because why is that important? That creates positive bank account balance. Now what does that mean? That simply means that you have money in plus on your bank account. It's that simple. And this is important because whenever something unexpected might happen in the future, they have the money right now on their bank account to cover those potential costs that might happen with that unexpected event. You know what I mean? Because the danger of unexpected events is literally that we don't expect them. So if something happens, maybe one computer breaks down, because this is a gaming company, they have the money from that bank account to repair that computer quickly and then start producing business and profit again. You know, I mean, start producing profit and revenue again, you know. So do they have positive bank account balance? You are a smart young man, so use your brain. Look, they have $5 billion in plus on their bank account, which is an amazing amount of money. Even if the companies have 1 billion or more, that's already an amazing sign, because $1 billion is obviously quite a lot of money, right? So whenever you analyze like money or companies in general, just think about them as your own, okay? Think about them, for example, when we had the debt. Is high debt good for you? Yes or no? No, it isn't, because you are more stressful, you have higher chance of making stupid decisions because you want to save that debt, and then you just do a mess and then you are more fucked up, okay? Same with the money. Are you happy with more money on your bank account or with less money? Obviously with more money, because the more money you have, the easier you sleep, the more you are calm, you know, you are not stressed, you are relaxed, you feel like a boss. It's that simple, okay? The same with the companies. Now we come to the value, and obviously we are good investors, so we want to invest in stocks that are undervalued, okay? Now how do we measure valuation? By two concepts. The first concept is called P/E ratio, and the second one is called intrinsic value. Now, as a complete beginner, you might not be familiar with those things, so I will try to explain as best as I can, okay? P/E ratio is one number used to compare NetEase profitability and valuation with their competitors and overall from the stock market, okay? So we compare NetEase with competitors and the whole stock market, and preferably P/E ratio should be lower than 15. Why exactly 15? Because stock market's P/E ratio is on average 15, and obviously undervalued stock is going to have a P/E ratio below 15, right? Otherwise it wouldn't be undervalued. Now, does NetEase have an undervalued P/E ratio? Yes, they almost have 15, but still they have 14.62, which is just slightly below 15, so we can say that they are actually fairly valued, but still just a little bit undervalued, okay? That's an amazing sign. Now we come to the intrinsic value, and this might sound a bit complicated, but it's actually very simple, so stick with me right now here. Intrinsic value tells you the price that NetEase should have at this exact moment based on some calculations from the income statements and financial statements in general, okay? Now let's take a look at the example. Intrinsic value tells you the price that NetEase should have, okay, which is $116. But the actual stock price is $94. So you can see that the price that they should have is actually higher than the currently what they have, okay? Which means, based on the instruction, if intrinsic value is higher than the current price, that means the stock is undervalued, okay? Because the price that they should have is higher than the current price. I know that I'm repeating myself way too much, but this is an important concept for you to understand. So, is the NetEase stock undervalued? Yes, it is. And now we come to the price, and for price we have just a simple instruction that price has to be lower than 150 euros. You are from America, so for you it's $150. Now the current stock price at the moment of when I was preparing the data was $94, but you can see it grew by around $2 to 96. So yeah, it is still below $150, which is an amazing sign for us, because whenever we begin on the stock market, we are obviously young men with a tight budget. We have maybe 400, 500 euros that our grandmas gave us to buy sweets, but instead we wanted to get rich, so we invested that money, okay? And when you have like $500, you cannot do much with that. You know, you can maybe buy one, I don't know, Amazon stock that costs maybe $400, and then that's it. You know, you are out of money, and if that stock drops, then what will you do? Nothing. But if you buy cheap stocks that are, let's say, maximum $150, then with $500 you can actually buy 4 or even 5 stocks. And then if one of them is shitty stock, other 4 might still be good picks. So overall you are still in plus. This is how diversification of your portfolio works, okay? So listen to that guideline, listen to the advice that you have here, and you should be fine, okay? Now we come to the final evaluation, where we are just going to summarize everything that we found out about NetEase so far. So, does the chart grow? Yes, it does. It even grows exponentially, what we want to see. If you don't believe me, go watch the whole video again. Now, does the profit grow as well? Yes, it does, because it even grows exponentially, so that's a good sign. Does the debt decrease through the years? Technically yes, but we don't have enough data, so we marked debt as a bad thing, okay? Do they have money on their bank account? Yes, they do. They have $4 billion, which is an amazing amount of money. And is NetEase undervalued stock? Yes, it is, both with P/E ratio and intrinsic value. And is the stock price below $150? Yes, it is. So we are good to go here as well. Now, should you buy or sell? In my opinion, this is a very interesting stock, so I would do the following. If I were you, and if I would be interested in gaming, then this stock might be a good pick for you, because as you can see, they have growing profits, they have low debt, they are reinvesting the money back, they are even paying dividends, I think, which is an amazing thing. They are undervalued, they are below $150, so they are actually quite a good stock. But the problem with me personally is that I am not interested in gaming industry, because it just doesn't sound that serious, okay? Because for example, who is playing computer? Probably you, because you are addicted to video games. So you are, for you that might be a good pick, you know, you might think, okay, yeah, okay, we are now gamers, we are doing YouTube channels and gaming and so on and so on. But when you think about it, other sectors of the stock market are a much better choice, because not everyone games, but everyone, for example, has a bank account. So when you invest in banking stocks, for example, you immediately have literally every person on the planet that has a bank account. But not every person on the planet is gaming, you know what I mean? So for me personally, I invest in financial stocks and in real estate stocks, because everyone needs money, that's why financial stocks, and everyone needs a house, that's why real estate stocks, okay? It's that simple. So if you are interested in gaming, then this stock might be good for you, But for me, if I'm honest with you, I don't give a fuck about video games that much. And so for me, this stock is worthless, even though it's an amazing company. But for me, I'm not interested in that. It's that simple. Now, if you want to know more about stock market investing, I invite you to click the first link in the description and we are going to have a little conversation. Nah, jokes aside, click subscribe, join me on my journey to become rich by stock market investing, do the hard work and see you on top of the world.